Inflation is a significant factor that can impact your retirement savings. It refers to the general rise in prices over time, which reduces the purchasing power of money. Here are several strategies you can implement to protect your retirement savings from inflation. One of the most common ways to hedge against inflation is to invest in assets that tend to increase in value over time. Stocks, for instance, have historically provided returns that outpace inflation. When businesses raise prices to cope with increased costs due to inflation, those price increases can lead to higher profits, which can boost stock prices. Real estate is another asset that can serve as an inflation hedge. Like stocks, real estate values tend to rise over time, often at a rate that exceeds inflation. In addition, rents typically increase with inflation, providing an additional inflation hedge for those who invest in rental properties. While stocks and real estate can provide long-term growth that outpaces inflation, they come with a degree of risk. It's crucial to have a well-diversified portfolio to help mitigate this risk. A diversified portfolio might include a mix of stocks, bonds, real estate, and potentially other assets like commodities or inflation-protected securities. Speaking of inflation-protected securities, Treasury Inflation-Protected Securities, TIPS, are a type of U.S. government bond specifically designed to help investors hedge against inflation. The principal value of TIPS adjusts with inflation as measured by the Consumer Price Index. When TIPS mature, investors are paid the adjusted principal or original principal, whichever is greater. Commodities, such as gold, oil, and agricultural products, can also act as a hedge against inflation. During inflationary periods, the prices of these commodities tend to increase. Investing in commodities can be done in various ways, including buying the physical commodity, purchasing futures contracts, or investing in exchange-traded funds, ETFs, that track the price of commodities. Another approach to protect your retirement savings from inflation is to invest in annuities that provide inflation-adjusted payouts. Some annuities are designed to provide a stream of income that increases each year to keep pace with inflation. This can provide a guaranteed, inflation-adjusted income stream for a certain period or even for life. It's also important to consider Social Security benefits, which are automatically adjusted for inflation each year based on changes in the Consumer Price Index. These cost of living adjustments can help maintain purchasing power in retirement. Another aspect to consider is your spending habits. Being mindful of how inflation affects the cost of goods and services can help you make smarter spending decisions. For example, if certain costs are rising rapidly due to inflation, you might choose to cut back in those areas or look for cheaper alternatives. Having a flexible retirement budget is another useful strategy. This involves adjusting your spending based on changes in inflation and other factors. For instance, in years when inflation is high, you might choose to cut back on discretionary spending. Conversely, in years when inflation is low, you might have more flexibility to spend. A solid emergency fund can also be helpful in protecting against inflation. If inflation leads to higher costs or reduces your purchasing power, having an emergency fund can provide a buffer that allows you to adjust without dipping into your retirement savings. Investing in international assets is another potential inflation hedge. If inflation is high in your home country, having investments in other countries where inflation is lower could potentially provide a level of protection. This could be achieved through investing in international stocks, bonds, or real estate. Investing in high-quality dividend-paying stocks is another potential strategy. These companies often have a track record of not only paying regular dividends but also increasing them over time, which can help offset the impact of inflation. One final strategy to consider is to continue working in some capacity during retirement. This doesn't necessarily mean staying in your current job or working full-time. It could be part-time work, consulting, or turning a hobby into a small business. Earning income during retirement can help supplement your retirement savings and provide additional flexibility to cope with inflation. Remember, protecting your retirement savings from inflation requires a multifaceted approach. It involves not only investing in assets that can grow and outpace inflation but also having a diversified portfolio, making smart spending decisions, and potentially continuing to earn income during retirement. It's also important to regularly review your strategies and make adjustments as needed based on changes in inflation and your personal situation.